Welcome back. Well, we're joined right now by Brent Wilsey from Wilsey Asset Management. He's here this morning to talk about the history of investment advice. Good morning, Brent.
Well, good morning.
So we were talking a little bit about just how things have changed in the last 40 years. I haven't been alive for 40 years, but how has what you would say for financial investment advice changed maybe from my parents' generation to mine? What does it look like today?
Great question, because over the last 40 plus years, things have changed a lot. I mean, you go back to the 80s when they had the big brokerage firms, and you won't remember these names. Your parents will. E.F. Hutton, Merrill Lynch, Dean Winter, these were some big firms. Also, too, back then you had the movie Wall Street. I mean, it was just a big, Wall Street was big and stuff. Then we got into the 90s, and it started changing to where the big brokerage firms, they were losing advisors going to independent firms. And the independent firms, an independent broker, they weren't controlled by the big brokerage firms. Then we hit around, probably 15 years ago, the advent of RIAs came out, and RIAs began, they were just small brokers that were leaving, but now we've got the changes now where we got the big RIA firms.
And what are those? Tell me about them.
Well, the big RIA firms, again, RIA stands for Registered Investment Advisory Firm. So now you got these big firms, and they might have like 1 million clients. They might have 1,000 brokers. Their assets under management are many times 70 billion, maybe 200 billion. There's one I know that's 200 billion. So it's not where you go into one firm that's an investment advisor and he does everything. You're now going to these bigger firms where there's many advisors, many brokers that are trying to help you out with your financial situation.
And how does that change the customer experience?
It's good and bad. I mean, the nice thing is that when you go to these big firms, they have in-house trust departments, in-house CPAs, so you can kind of get maybe all your services in one area, which could be good, could be bad, because maybe they don't have a good CPA or maybe not a good trust department. So that could be good, could be bad. Also, they could spend more on technology because they are bigger. So more technology per rep is what they may be spending. And they have a built-in succession plan. One thing that the people run into is that they get a nice advisor they like, and then they move or they pass away. Well, they do have other advisors there for you. Now, that could be good. We've had a lot of people come to our firm because their advisor left. They didn't like the new person that took over. So you have that built-in succession plan for you.
Very cool. So tell me a little bit about the pros and the cons.
Well, those are the pros. The cons are you're going to get a cookie cutter design. And that means that everything's going to be the same because you have an advisor who's one of, again, we'll say 100 or 1,000 advisors. They've got to do pretty much the same thing for everybody because they have upper management saying, do this, do that. So they're not really listening to what people want. Also, too, they may invest 100% of your assets on day one. I was talking to somebody out before I came in. Right now, we're only investing about 15 to 20% of our assets because we can't find anything to invest in. When you go to these big firms, it's cookie cutter. They're going to invest everything right away in different asset allocation models probably. Lack of service from your advisor. Many times they don't have the time to actually talk to their clients the way you want to be talking to. They can't answer a call. I had people say, yeah, I didn't get a call back for a week because they're so busy. And they're more busy. It's kind of, again, I come back to that cookie cutter thing. They're not advisors the way we used to be. I mean, I talk to all my clients. They're more that's a corporate role model they got to fill. And then lastly, sometimes your advisor can change. I've had one client that came over, he goes, in the past year, I've had 4 different advisors at this firm, and I don't like it, so they change. So they can do that to you. So it's just pros and cons. I don't like the bigger things. I like to be that we're small. Again, we manage about $650 million, but I still talk to my clients. I know them, I can speak to them personally on the phone.
So more of a personalized experience with you.
That's exactly true. And again, I mean, and people might like the big firms, but I think you kind of get lost in the shuffle.
All right. Well, thank you so much. I really appreciate you getting up at this early hour and joining us today. I'm going to send